What's up, everybody? It's still on here. Hope you guys are all having a fantastic day. We're into section 2 now. Today we're going to be going over what type of trader do you want to be? How do you want to trade? And before we go over any of these four options, in my opinion, that's what I've consolidated it down to. I'm sure there's more. We're going to go over risk management and emotions because without a solid understanding of these right here, you're never gonna make any of these work whatsoever, especially the short term trades. You'll never make them work. So this is by far the most important. This one right here. Okay, so risk management and emotions. Risk management is actually pretty straightforward. I have a pretty simplistic thing in my mentorship Discord that explains it quite well, and it's basically, where the fuck's the channel? There it is. It's labeled my personal risk management strategy. I aim for 5% a week, 10 to 20% a month, and a daily loss of 1 to 2%, which is for me 4 trades because I risk 0.5% a trade. Right? So let's just show that real quick. Hold up. Okay. This is my. Can I zoom in on this? Probably not. Alright, whatever. If you need a screenshot, fucking screenshot it. Anyways, basically just says my personal risk management strategy. It's 5% a week, 10 to 20% a month, daily loss of 1 to 2% that I really rarely do hit. You're risking 0.5% a trade. This is up to discretion. I can lose up to 4 trades a day before I stop. Normally I'll lose 1 and stop, maybe 2. That would be my 1%. I don't deviate from it. I don't change my percentage. When you change that, you start losing more and more, and that's a recipe for disaster. It's how you're going to blow your account. I move my trade to break even after a certain amount. This is up to your discretion as well. After about 50% of the position, I move my stop loss to break even. Partial my trade and set up reasonable take profits. I like 1 to 3 RR, and if it's a longer term trade, I will partial at 1 to 2 and then let my trade run to take profit. Or if it's a really long trade, like a 1 to 15, 1 to 20, I'll take a couple partials in between. Never in your fucking life. I don't care if it's the guru of all gurus telling you, do not FOMO into any trade ever. Know what you're risking, know what you're investing into before you trade into it. Do not just trade just to trade. That's how you lose money. Even if it works out, the time you do it, it'll start a bad habit and you'll blow your account. You just got to remember that you're in this for the long game and not the short game. And that's if you get anything from this video, that's what you need to understand. When you're trading, like, you got to treat it like it's your fucking livelihood. You're not just here gambling money. Like, if you want to go gamble, go to a casino. So when you're here trading, you need to go for the long game. Don't go for the short game. Like, if you want to go to the short game, just head to the casino, because anything worth having in life takes hard work. If you're not feeling well, if you're either angry, sad, depressed, hungover, sick, whatever the case happens to be, just don't trade. Like, you need to be as mentally clear as you can be. Otherwise, you're just wasting your time. The last bit is stop while you're ahead. If you're up 5 to 10% in a week, just stop trading. Just don't try to double that. Just set yourself a limit. So if your limit's 20% and you hit 20%, don't try to hit 40%. If your limit's 50% and you hit 50%, don't fucking try to go 100%. Take your profits, take your wins, and over time, that's going to make you more wealthy than literally anything you could possibly else do. That's risk management. Emotions is a whole another freaking ball game. That's really it's more important than risk management, because if you can't control your emotions when you're trading and you're watching these charts, like say on the minute here, yeah, like right in here. Say you're into this Bitcoin trade and you get down here into the 1 minute and you start looking at each individual candlestick and you're like, okay, I think I can get in here. Oh, I think I can get in here. Oh, I think I can get in here. Oh, it's coming back up. Maybe this is where I should get in. Instead of looking at your overall plan of how you want to get in, like, you're going to fuck yourself every single time. I'm just going to throw this out here. I didn't take this trade. I actually did predict it though. It was really solid. Oh, where'd it go? There it is. I did predict this trade. I was at a party when it fucking hit, so it's unfortunate. It is probably going to run to these equal highs. Not important. We're going over emotions. So emotions and psychology and trading, probably along with risk management, if we tie that in with it, even though they're completely different things, it's probably 70 to 80% of trading. Some would probably even say 90% of trading. Like strategy really has little to do with actual trading. Like, yeah, you need to understand how the markets move, but if you can't control your risk and you're just throwing in trade after trade after trade because you're mad that you lost your first one, you're going to just blow your account, then you're going to quit trading. You're just kind of a miserable time. So this by far is the most important one to work on. How do you work on it? You need to like catch yourself in action. Like when you notice yourself about to take another trade, fucking get off. Just close everything down. Just get off. There's no point in letting this ride yourself out. And over time, you need to slowly get a grasp on what you're actually doing. So like in that, oh shit, I already closed it. When I said like if you're not feeling well, like either being angry, sad, depressed, hungover, sick, whatever the case, um, here you go, right here. If you join this, you'll have this constantly sitting in your face. You guys can copy it down if you want. It like seriously, just don't trade. Like if you're not emotionally stable, don't trade that day. And if you're not emotionally stable every day, see a psychologist, work on that shit, because this is the best way to make a lot of money. So with these two combined, risk management and emotions, like this by far is 70% of your trading. This'll keep you from losing 70% of the time. Okay. Now we're actually going to go into the actual trading strategies, which why probably most of you clicked on this video. Okay. Long-term trader typically holds over 2 weeks, typically. Time frames is 4 hours plus, so 4 hour daily, weekly, 2 day, 3 day, something around there on those time frames. These trades are like long term. So like say for example, like you were which random point in the hell are we on Bitcoin. Okay. Say like you're a news trader. News traders are typically long term. Or you're an investor of sorts, which is typically a long term trade as well. And say you're trying to find a place and price to get into here. You would want to, find Bitcoin when it drops, for example. Like let's go back to a point in history in Bitcoin, like here where spikes up to 11 grand, then drops down to 4 grand. So 10.5. This like news would have caused something like this to dramatically make Bitcoin spike. You'd want to get in down here, wherever. I don't fucking give a shit what your stop loss is. Just whatever, get into the position. Because you know that Bitcoin's gonna go back up. And you'd be targeting all new highs. We're just gonna say you targeted somewhere up to here, right? Okay. Now, when you're long-term trading, you do not just sit there with the whole fucking position up like this the whole time. Okay, that's psycho. That's actually psycho. You set reasonable areas, like say, Bitcoin's gonna hit back up to 4K soon. Wait, what was it starting at here? Okay. So yeah. Say Bitcoin's going to go back up to 6 or 7K soon. You set a partial, right? A partial at 7K. So right there. All right. This is your partial. Okay. So you don't have to close 80%. That's just what I happen to do. Then you're going to set another partial at a reasonable number. Say Bitcoin breaks a new high. Okay. You'd want to set a partial there, right? Because you don't know for sure if Bitcoin's going to go back up or not unless you're like within the company. You know what's going on over there, and even then it's risky. So that's where you'd want to set another partial. And then when you break, Bitcoin's obviously been breaking highs, so maybe your next drawback you'd want to take out another partial. And let's say you're just taking out 20% each time or 10% each time, and up until you get to around 50-60%, and then you just leave your position alone. And then when Bitcoin hits a new fucking high that you want to take out, then you can take that out. That's what a long-term trader would be doing. This is over fucking months though, so you could also be doing the same thing on a shorter time frame. Say like let's say 2 weeks here. What's a 2 week period? Yeah, from let's go 1 month. So Bitcoin's at an all time high, 65K here, and you're ready to sell. You think Bitcoin's going to drop back down, whatever reason, whatever your strategy might be. This is just types of traders. I'm not going to give you long-term strategies. I don't trade this way. I just know how it works. You'd want to take out partials still. So like when you break a low, you'd want to take out a partial. When you break another low, you'd want to take out another partial until like you're ready to like either close your position or let it come back and hit. And by the way, as you're getting down, like say you get down to 50% of the position, say you were targeting this demand zone over here. After you get about 50% of the way, you're going to move this to break even. or you can start moving your thing with structure. So you'd want to stop loss here, and then when it goes down to here, you want to stop loss here, and then when it goes down to here, you want to stop loss here. Like, just partial with structure. That way, whenever this trade bounces back up and starts hitting new highs, you don't lose money. You actually just gain more money. All right, that's what a long-term trader would do. Swing trader is typically 1 day to 2 weeks. Time frames are an hour plus typically, unless you're going on a lower time frame just to get an entry. But you're going to be looking, 1 hour to 2 hour. We're just going to keep using Bitcoin because it's the only market that's actually moving right now. I could use the others, but it doesn't matter. They all move about the same. I say that. They all have similar algorithmic moving. Bitcoin obviously has a lot more volatility. So yeah, a swing trader, it's the same concept really as a long-term trader. It's quicker. It's a lot of people swing trade. This is actually probably the most common. So once again, yeah, you'd like find places where you're like, oh, there's a huge order. Oh, shoot, to sell. Like, oh, there's a huge order block here. It's like, okay, we'll probably buy off of this, and then set a reasonable stop loss above the last low over here maybe, and trade off of this. And once again, like the same concept as the other one. You want to take partials when you're breaking new highs. So, this right here this broke this high, so this would be a reasonable partial area. So you partial at what, 1 to 4, let's say, just 1 to 4 for simplistic sake. Then this breaks this high over here. It's probably good another partial. Partialing's up to you. I close 80% of my order typically, but I don't have my trades open for more than a day typically, even though I do trade the higher time frames. So yeah, that's completely up to you. But that's basically what swing trading is. You're just holding a position for 1 to 2 weeks, or not 1 to 2 weeks, 1 day to 2 weeks. A lot of people like doing that. It's a comfortable way to trade. When you're on the higher time frames, you're leaving a lot less up to chance, because you can really see what's going on. Like right here, for example, in this Bitcoin trade, like I saw this imbalance down here. I saw this order block here. I saw these equal highs here. So I was like, okay, price is probably going to come down here, fill this imbalance, tap this order block, and move up to these equal highs. Like that's what was going on in my head when I saw this. Okay. And I mean, you could see how that played out. Now, price easily could have rejected off of this order block here and started moving back down to hit these lows right here. But since price had already broken this low right here, then formed this order block, left this imbalance behind, and then they had this imbalance up top, I figured that price is going to do exactly what I thought it was going to do. And this time it did do that. So that's, I don't know, that's just how I trade. So scalp trader, this is, I would say like maybe 10% of people are long term. If that's fucking rough. These are made up numbers in my head, but swing traders probably make up 30%, and then scalp traders make up, the last 60 to 70%, whatever it would be. Time frames consist of like 1 minute to 4 hours. There's a lot of people that like have indicator strategies and whatnot on like the 1 and 5 minute and 30-minute time frames. So like that's where this comes from. Like not everyone's obviously smart money trading. What the hell is this? Okay. Anyways, so there are a lot of people that trade on the lower time frames. They have indicators and algorithmic ways of trading that's going to show them like how to get involved in price down here. As long as they're zooming out still far enough, like in judging based off patterns and structure that they know and are comfortable with, like the trading works out anyways. And as long as they're following their risk management and not letting their emotions fuel their trades, like they're gonna be all right trading this low time frame. It's actually one of the quickest fucking ways to make money. Just learning how to scalp effectively, and that means setting up reasonable target, take profits and whatnot. It's not getting an entry down here and then aiming for the new high and not closing your trade out, because price is going to come back and liquidate you most likely. Like this right here, this trade is most likely not going to break above here or here, just the way price has been slowly moving down. Not slowly, it's actually been pretty quick with Bitcoin, but you get what I'm saying here. The last thing is combinations. Turning like a scalp trade into a long-term trade or a swing trade, or the combination of like all three, or the vice versa, saying like you come here and you find a long trade here, Bitcoin's going to go down from whatever, say it's at 41k, but you expecting it to come down in the 20ks for whatever reason, whatever your strategy may be. So you have a long-term position here, and on top of that, you're also setting up swing trades that you're seeing on these pullbacks in here. So you're also trading those, but you're setting up reasonable take profits keeping your stop loss above those highs probably. And then on top of that, you're finding order blocks down in here. Fuck, let me find one. This one will work. You're finding order blocks where it's taking out highs over here and taking price back down the other way, like getting in on the tests and closing these trades out like relatively soon, like within that same day. So you'd want to, maybe close down at the bottom of this candle, maybe on this pullback right here. And that would be like the idea of combining all three. That's actually kind of what I do, except for I don't long-term trade. I just swing and scalp for the most part. Scalp is also I say scalp, but scalp typically refers to like the 5 minute and the 1 minute. I also like kind of tie them in, me personally, like you don't have to do this, but I also personally tie scalp trading in with like intraday and day trading, which is obviously what most of us do, because this is not the easiest, but the most profitable, the most quick, I should say, to return gains. Maybe not the most profitable, but definitely the most quick to return your gains. So yeah, trading the combinations would be, combining 1 to 2 of these. But I want to preference again that like none of these happen whatsoever if you are not managing this. And I'll make a full separate video of this and give you guys a lot of live examples and whatnot. Time frames for the combinations, obviously a mix, because you're bouncing back and forth across all the time frames, especially if you're turning a long trade into scalps on the way down and whatnot. 1 second. There's not too much more I want to go over in this video, but I hope you guys got a good idea of the difference between long-term trades and short-term trades. I'm all coffeeed up right now. I'm ready to trade. Market's going to open in about 4 hours, so I hope you guys learned something from this video. Take something from it. There'll be another section. I think the next one I might do is either this, or we're going to go over liquidity in more depth and explain retail patterns and other things for you guys, so you understand order flow and how it all works. I'll see you guys in that video. Take care.